This conference will now
Yeah,
be
I was just
recorded.
about to say that.
Okay, everybody's getting ready to say it. Okay. Statement of cash flows, the indirect method. And we did the statement of cash flow, and I didn't have the new students learn the old way because we have to learn a new way now because we might have 1,000 cash transactions. And so we can't do that old way. Uh, but this is a very important statement where cash flows come from. The three things we're looking at: cash flows from operating activities, investing activities, and financing activities. So when we look at a company and we're trying to make, someone making, we want to make decisions on buying stocks, well, you got to look at the cash flow statements. And so we're going to show, and that's why we looked at those fraudulent companies. The cash flow statement is a way to help us see where there's fraudulent or just poor management operating. When a business operates, it's supposed to get its cash from operations. Okay. Investment activities, we want this to be negative because if a company is expanding, we want that negative. And then in financing activities, we want that negative. As I've said before, operations is like your salary. And when you graduate, you want your job so that you can buy some assets, not sell them. You want to buy some new assets, pay off your student loans, and have money left over. And remember, we always started with a company putting cash in and getting common stock. And the objective of the company is to increase the cash through earnings. See, cash can increase other ways, but we want to increase cash through earnings. We can increase cash by selling our assets. We can increase cash by borrowing money. And so we always want to be aware of that we've got to not only look at the income statement, statement of retained earnings and balance sheet, but we got to look at more specifically what's happening with the cash. And what we like to do is to look at a trend of those statements for a 3 to 5 year period. We have the income statement, we have the balance sheet, then we have the statement of cash flow. And this helps provide information on liquidity and solvency. And so if we looked at the statement of cash flow for GameStop, and hopefully someone is doing GameStop, this should give us some ideas in terms of, okay, how solvent is this company? And
What
we
does
have
solvency mean?
whether you have cash assets greater than your liabilities. That so liquidity and solvency means you can pay your bills. Okay, so that's all that means. So solvent means you got enough money to pay your bills as they come due. Okay, and they got to be liquid assets. If you own some jewelry and your rent comes due, that's not going to do you any good. So when we're looking at a company, it has to have liquid assets, cash, receivables that's going to turn into cash so that it can pay its liabilities. Okay. And so once again, as we look at three, you can compare firms. See, if you're going to make decisions on investing in a company, then you look at the cash flow statements of various companies to see how they compare. So income statements and cash flow statements. So there's more to investing than just looking at income and looking at a stock, but you compare companies. This indicates the timing and probability of future cash flows. And as I say here, 5, it aids us in determining fraudulent activities from making inappropriate journal entries as companies were doing. And so, once again, the parts of the cash flow statement: operations. This is where the cash is supposed to come from. This is like salary. Macy's is supposed to make money selling shoes. Investment, we want Macy's, GameStop to be expanding and creating more stores, not selling stores for cash. And this is why, we had you working on that journal entry so that when you see sales of assets, gains, and losses, you know exactly how that journal entry was made. So we had review problems 1, 2, and 3. That's why I had that entry in there. And then financing, we want to see how it stands here. And we want to make sure you aren't getting money by borrowing. Then we have the change in cash. And so when we do a cash flow statement, let's assume that we had 2 million in sources and 1 million in uses from operations. So the net change is $1 million. What we would like to see in the investment area, that we possibly utilize some of that money, say 400,000, to expand operations. And so the net change here is a minus 400. And in a good company, we are not borrowing money, but we're using that to pay off debts. So another minus 200. And we still have cash left over of 400,000. So this is how a good company looks. And so when you're doing your cash flow papers, you're picking the company, you're looking at over a period of 3 years, so the statements are published, and you're just showing this column here. You got operation, investment, financing, change in cash. Then you're just showing the net changes over a 3-year period. You don't have to have these. So you pull those out. Then do I want to invest $1 million in this company? So that's what you're going to be doing as you do that cash flow paper. So you go, hopefully you got your company selected. You look at the latest 3 cash flow statements they have. Year 1 changes, year 2 changes, year 3 changes. Would you invest $1 million in that company? Okay. Let's look at the theory behind the indirect method. Is everyone familiar with this equation? Assets equal liabilities plus owner's equity, stockholders' equity.
Yeah.
Is there anybody who's not familiar with that statement?
Hey, I have a question.
Okay.
Quick. So on Blackboard, when you have the individual cash flow assignment, is that the one that we get the companies for?
Correct. Everybody gets a company, and there should be an example in Blackboard and there's examples in the primer of what a cash flow statement looks like. Some people go overboard, in terms of being impressive, but it doesn't have to be more than a page or 2. Okay. But you want to look at the net income, look at the stock prices and things like that. Will you invest $1 million? Someone said people learn how to invest, people studying the market. Well, this is what you got to study. Okay. This is what you got to study.
Well, we're doing a team one as well, right? I guess I'm confused on that. Are we doing a team cash flow statement?
You have a homework that's team.
Oh, okay. But it's not the same as the paper.
Correct. It's different from the paper. So there's a homework
Okay.
problem, and that's in Blackboard with each team with their assignment for Thursday.
So, question: Where you said that the example on how to do this is in Blackboard, but I don't see it. Like, is the paper, the cash flow paper, it's supposed to be like a Word document? Are we actually putting like the format on there? Like, is it just supposed to be
It's
like?
your Word. It's your Word document, similar to what you did with the. Let's see if I can find one. Similar to what you did with your PowerPoint. It's your document. No specific way how to do it.
So we can give like background on the company and stuff like that too. Like, is it just formal or is it like a specific like this or no?
Here's one by a student here. Example of a cash flow research paper. And this person was analyzing GE. So they looked at the net income for 3 years and they put the full cash flow statements in. Now this is public, so all you're doing is copying this. You aren't making any calculation. But so this person looked at 14, 15, and 16. What was the net income? But then what was the cash flow from operations? And so instead of having operations were high, then all of a sudden operations drop to a minus number. Then investments. You only need this bottom number, but you can put others in if you so desire. Then the person did this. Like I said, this was a student document. Then the financing activities, they put that in. Put exchange rate changes in. Then they looked at the change in cash. And by the end of the day, the company was down 41 million. Now they had net income every year. Well, net income this year lost, then they had 8 million. Okay. So if you were just looking at net income, you said, well, this is a great company. This is in thousands. I guess this is 8 billion. So the company's doing well. It's got $8 billion in income. But its cash flow has gone down by 49 billion. So it's in trouble. So you cannot just look at income. But here's a change here. And the student has, I've chosen this company to demonstrate that what poor management and bad financial decisions making look like on a statement of cash flow. At one point, GE was America's greatest company. They were Fortune 1500 in terms of revenue. Now they're being weighed down by massive pension planning and billions in losses and on and on and on. So that's the kind of analysis that you're trying to make. Okay? So this is an
Okay,
example.
so so this last part that you were scrolling on, this is like the continuing to what they wrote, or is this
Yeah,
like a whole different paper, or is this like a different?
he's just continuing to write. He was excited about it. So yours can be 3 or 4 pages. But if you get excited, you write more.
Who is 3 or 4 pages? I thought this is like a half 1 to 2. Like I didn't
That's
think it was
fine.
even gonna
That's
take.
fine. That's fine for a C. Okay.
Man, don't do me like that, sir. Don't do it like that.
No, it could be a couple pages. And like, here's a person doing ExxonMobil, and they just went, they went on and on and on and on and on and on. Because they got excited. So sometimes people get excited. But what I will say, if you don't look at the cash flow statement, you can't do an investing. Okay? You can't do any investing. And this is why we had all of those frauds, because people didn't look at the cash flow statements. This is this team portfolio project where you select 10 stocks and you invest $1 million. You you get into the various sectors, time frame, January 1 to May 1st.
Yeah, you move too fast. We just now getting on cash flow. Hold on now.
No,
Don't start talking about no stock markets now.
hey, we got to.
Take a
A
slow
man,
easy.
a guy who somebody on your team says high school students invested in stock. So how can we not talk about it?
Talking about the assignment at hand. Moving too fast.
All right, let's go back to the assignments at hand.
Is this for the group project or just the one by yourself?
That's one by itself. If I can get back to where we were. Okay, so here's where we were. So let's get back to what we got for Thursday. Okay, so you also know that what? Assets equal liabilities plus common stock plus retained earnings, correct? Now we know that cash plus the other assets equal liabilities plus common stock plus retained earnings. Cash equals liabilities plus common stock plus retained earnings minus other assets. Cash equals current liabilities plus long-term liabilities plus common stock plus retained earnings minus current assets minus long-term assets. Cash equals current liabilities plus long-term liabilities plus common stock plus net income minus dividends, which is retained earnings, net income minus dividends, minus current assets minus long-term asset plus contra asset. So we're just working with this basic formula. And so then we have the change in cash is going to equal the change in everything on the other side. So this is how we are going to move so that we don't have to look at each cash transaction. We want the change in cash. So we're going to look at it in terms of the change of everything else. Okay. Now we got to see where we're going to put these changes at. Our answer is cash. That's in part 4. Remember, there are 3 parts to the cash flow statement: operation, investment, financing, change in cash. You have some changes that are going to be sources, revenue coming in, some that are going to be uses, items spent, then the net change. So now we're going to place all of these items in terms of where they go in terms of those changes. A current liability is going to be in part 1. So I also said we're looking for cash, that's 4. A current liability is going to be in part 1. A long-term liability, 1 here, okay, it's going to be in part 1. A long-term liability is in part 3. Common stock is in part 3. The change is there. Net income is in part 1. Dividends is in part 3. A current asset is in part 1. Long-term assets in part 2. Contra assets in part 1. So we're just saying now where these items go. And let me put cap locks here. Increase. ASC. Okay, so then let me copy these. Copy. I'm just changing these to increase so you can see them. You know, so you're not confused and paste. Kind of running out of space here. Let's just see. Get these back. So you just know these are increases. Those are not Roman numerals in the parts. So the first thing that you're doing now, okay, so you're seeing we're looking at the change in cash. We're going to look at it through all the other accounts, not through the cash transactions per se. And we're going to look at the changes. We have the change in cash. We're looking at the changes in all these accounts. For current liabilities, their change is going to be reflected in part 1. Long-term liabilities in part 3. Common stock, part 3. Net income is in part 1. Dividends is in part 3. Current assets in part 1. Long-term assets in part 2. Contra accounts in part 1. So I've just, showed you where the changes go. Now, if current liabilities increase, they are a source. If they decrease, they're a use. Same thing with a long-term liability. It's going to be in the source column if it increases. It's going to be in the use column if it decreases. Common stock, if it increases, it's a source. If it decreases, it's a use. Net income, if it increases, it's a source. If it decreases, it's a use. Dividends, typically always going to be an increase, and they're going to be in part 3 as a use. Wait a minute, it's not supposed to be. Let me take this out of dividends. Dividends is always going to be a use in part 3. It's going to increase, but it's going to be a use. Current assets, if they decrease, they're a source. If they increase, they're a use. Long-term assets, same thing. If they increase, they're a source. If they decrease, they're a use. Most times for contra assets, they're going to increase and they're going to be a source of cash. So based on our formula, I'm telling you where these changes are going to go. So we're going to get the same change in cash as if we looked at 1,000 checks based on this formula by just looking at the changes in these accounts. So this is our indirect methods. So how do we complete the statement of cash flows now? We calculate the change in cash. That's the answer. We calculate the change in each balance sheet account. The change in retained earnings is reflected on the statement by the net income and on the financial statement by the net income and dividends. Based on the chart above, place the change in the appropriate section of the statement of cash flow as an increase or decrease. The net changes in 1, 2, and 3 when combined equals the change in cash listed in section 4. So the net changes in 1, 2, and 3 equals the change in 4. Now, so that when you do a cash flow statement and you can get something right on this statement, since it is so hard to work with, since it is so confusing, what we're going to do is this. We're going to say that the first thing that we're going to do when we do a cash flow statement, get me some colors here. The first thing you're going to do when you do a cash flow statement is to calculate the change in cash, okay? That's the first thing you're going to do. You're going to look at the financial statements and you're going to calculate the change in cash. So you got one thing done on the cash flow statement. That's first. Then the second thing you're going to do, you're going to put the net income in, okay? You're going to go to the income statement and put the net income in. And that's the second thing you're going to do. Or if it's a loss, you'd have it over here. But the second thing that you do is you put in the net income or the loss. And now you got two things done on your cash flow statement. And I got this template here showing operations, investments, cash flow from financing, change in cash flow. And so the final thing, well, we'll do a couple other things. Then we're going to put depreciation in as a source. So it's always a source. So we're going to put depreciation in next. Now we got three things done. And finally, we're going to put the dividends in. So that gives you four things on the statement done that you can pick off the financial statements right away. So the first thing we're going to do, we're going to calculate the change in cash. That's the answer to the problem. Then we're going to go to the income statement and put in the net income or net loss. We're going to look at the depreciation. We can get it from two places, on the income statement or the change in accumulated depreciation. And then we're going to put in the dividends. And a lot of time I make you calculate the statement of retained earnings to get the dividend. And now you got four things done on your statement of cash flow. And when I'm grading your exam, I'm grading each item you got on there. So you're already at 50%. So in the cash flow statement, source, use, net change, cash flow from operation, that's what we want to see. That's what we want that $1 million to be. Net income is a source, net loss is a use. Depreciation is always a source. If there's a decrease in a current asset, it's in the source. If it's an increase, it's a use. If the current liabilities increase, their source. If they decrease, their use.
Hey, so what do you mean by increase in an asset? Like, give me an example for that, because I don't really understand what you mean by that.
Thank you, Ms. Kayla. When we get ready to prepare a statement of cash flow, remember it was the change in cash. So we look at the changes between years. So rather than looking at each item, remember we got this formula up here which says that we can get the change in cash by looking at the change in every other asset. So that's a good point. So a change is simply going to be, you go to the balance sheet and look at the differences. So to the right. So when you're doing your cash flow statement, you can always put you can come in and put you in a change column. Then you can put in all your changes. Then once you see where the change is going, then you can put it on the statement. So that does that explain what a change is? Kind of.
I mean, I know what a change is, but like you said, I'm asking specifically about assets. Like, so you said decreases go under source, and increases go under use. Like, how do you what do you mean? How you increase the current? I don't get it. I guess I just don't get it right now.
Well, okay, well let me go through the change and we're gonna work on it.
Okay.
And so this was the statement operates in a different way. And so when all the frauds were going on, because people didn't know how to look at the statement, some people did, but most people didn't. people could not come up with the fraud, as we saw with GE. GE getting ready to go bankrupt, they had net income. So you cannot look at net income, you got to see what happened with the cash and whether they had cash in operation. And at the end of the day, if the company don't have cash in operations, there's a problem, whether it has income or whether it does not. So, and in operations is the net income, all the current assets, all the current liabilities. That's the operating part of the company. So we have to look at those and see what happened here. If there's a loss on the sale of a long-term asset or a gain on the sale of a long-term asset, they're in the net income, we take them out. So when we put this here, that's taking it out. Okay, cash flow from investments. Proceeds from the sale of a long-term asset, once again, that's why I had you make that journal entry, their source. Purchase of a long-term asset is a use. And as you know, the example I use, if you go sell your car and go to Las Vegas and spend all your money, what kind of shape are you going to be in, especially if you lose in Las Vegas when you get back and you don't have your car? Okay. Company, same thing. If they start to sell a location, they're in problem. We want them to purchase more. So we want this to be negative in a good company. Cash flow from financing. If you issue stock, it's a source. If you buy your stock back, it's a use, treasury stock. So that's why I had that journal entry in there, so you'd be able to pull that out. If you receive a long-term asset, that's a source, but you know, you got to repay it back. That's a use. Dividends, you're paying that to owners, that's a source. So then we add up the sources and uses in part one, the sources and uses in part two, the sources and uses in part three, and the change from those have to equal this change in cash. So let's look at our example. We have an income statement here, and this company lost $75,000. Had a gain on the sale of IBM stock. We're concerned with the bottom loss, not the net loss from operation. Then we have the balance sheet. And so from this statement, I want you all to prepare the statement of cash flow. Do you all have your templates? Let's see, I need to show the problem. Let's see if I can copy this template somewhere. Copy template. Okay. So here is you all's document. Okay. Kayla, here's your document. You ready to take the screen yet?
No. Wait. Why I gotta take the screen? Wait. I'm over here still trying to figure out what's going on with these assets, and you asked me to take the screen.
No, but let's talk. Okay, this is the statement of cash flow. Okay, template that I got up here. Well, I am gonna let you take the screen for a second. It won't go there. I don't have you listed on here. Can go to. Jose, are you ready to take the screen? I can't hear you, Jose.
Give me 1 second.
I don't know why I'm not listed there. You can give me a screen if
Okay,
you
now
want.
you showed up. And I'm on Kayla. Take the screen, Kayla.
What am I doing right now?
Okay.
Serious question.
All right, so let me put this over here a little bit. And let me put the problem. Okay, here's the problem. So what you got to do is to look at this problem, and it's in your primer. I got it right here.
What page is it on the primer? I'll pull it up on my screen.
Let me see. So I've changed these pages some, so she'll be around 229. And the example is on 231.
Oh, okay.
So what I want y'all to do is do those first four things. So we got the problem. Hopefully everybody's looking at it. Hopefully you can go back and forth. I want y'all to do the first four things I told you to do. Starting down here and going on. Can y'all do those first four things?
Danny boy, I have a question.
You got first four things done?
Can you actually give me the screen?
I thought you just want the whole.
Yeah.
All right, so sharing. Go to options. Got it now?
Yeah.
Good.
Okay. Now, what was the first four things? Because
Help her out, y'all do it. What's the first thing she's supposed to do?
wasn't the first one the income?
No.
No.
That
Oh.
wasn't first.
Okay. Well, messed that up. So.
What was the first thing she's supposed to do?
Calculate the change in cash.
Thank you.
Okay. So the beginning cash. Oh, hey, do that. It was 100,000, and then the ending cash. Let's see. Shoot, don't do that. The ending cash was
300,000.
so the difference should be
Plus, it went up.
wait, beginning. Oh, you're right. You're right. It did go up. So why on your template it say less ending cash, less ending? Because that less done mess me up.
You're just getting the change.
Okay,
So it's a positive change.
my fault. Okay, there we go.
We got our first thing done. What's that second thing we're going to put on the statement?
That's the income?
Net income or loss.
We had a net income, so let's put that on.
Right here.
You got it? What's
Yep.
the third thing?
The depreciation.
Okay, so we got the expense. We can get it two ways. Either the change in depreciation in a simple problem like this one, and that's always a source. Remember, that's not a cash entry. So we subtracted getting the net income, but that's not a cash item. So put that depreciation in, Kayla.
Depreciation. That's always a source, right? You just
Always a
said
source.
that. All right.
And then we say you put in dividends.
Dividends. I don't know. Where does dividends go? What part? Part 2? Wait.
Where does dividends go? That's payment to the owner, so that's going to be in part 3. Remember, that's where it was when we did it direct way. Remember, dividends were in part 3. How much is the dividends?
Does it say? I don't see nothing that say dividends on here. Actually,
You don't. Well, calculate dividends for me.
Oh man. Okay.
Okay, so who's going to help us calculate the dividends?
Dividends.
Cameron, you going to help us calculate dividends?
How do you calculate the dividend?
Based on this information, prepare a statement of retained earnings. So based on this information, if you were doing a statement of retained earnings, what would it look like? What's our beginning retained earnings?
Professor Boyd, I ain't gonna hold you right now. You really got me messed up a little bit in the head. Like I'm trying real hard today.
That's all right.
And I was actually doing good before I came to class, but I don't know what's going on right now. But it ain't working out.
Our beginning retained earnings is what?
0?
No. Look on the balance sheet.
Oh, okay. Wait. Okay, it say 300,000.
All right.
Oh.
Plus the net income.
Okay.
350.
Minus the ending retained earning. Well, the ending retained earning, well, you know it's minus dividend, and our retained earnings ending is 650, right? So
retained earnings ending is 550.
Mm-hmm.
So what does the dividend have to be?
150? No, that's wrong. Oh hell. Okay, hold on. 350. 300.
Plus.
That's the beginning. That's 650 minus 550. So dividends got to be 100,000.
Okay, so put that down.
Okay, and this go over here under. Over here.
Okay.
Yeah, it go on that side.
Now, let's go and do a scratch on the cash. So we got that done now. So just scratch out cash. Remember, you got to analyze every account.
Oh, I can't scratch this out. This is on the internet, so I
Okay.
can't do that.
Well, let's go begin to look at the other accounts then. Account receivable.
I just highlight it. Okay, accounts receivable. So okay, so am I calculating the difference and then
Yep,
putting it on the cash flow statement?
correct. So account receivable did what?
It increased.
So when the current asset increase, it's what?
You put it
As a,
on over here. Wait.
yep. Put A.
Okay.
Go back to A/R.
Oh, net income, net income.
Come down and can you? So just put A/R.
Okay, and then put the amount.
The change. That's why I say when you work these out, that's 75,000.
Okay.
What did inventory do?
Inventory decreased.
So what you gonna do there?
I'm gonna put that on there too.
You did what?
I'm gonna put it in the left column.
It's gonna be in the left because if the asset goes down,
Okay. And then same thing for equipment, right?
well, you got you. Okay.
What I'm doing.
But what part does equipment go in?
Equipment will go right under accounts receivable because it increased.
But long-term assets go where?
Oh shoot! You know what? That sure is right.
So we're in the part two now.
Okay, so a second part. Is it the same concept though? Like if it increase it go on the right side, and if it decrease it go on the left side?
Correct.
Okay. $375,000. Oh, okay.
We've already
And
done depreciation.
we did. We did. Okay.
Now I just need to do the investment in IBM stock.
Investments go in this part.
But it went up, so it's what?
Okay. It's on this side. So IBM stock, and that went up $200,000. So that's it for assets, right?
Correct.
Okay. So you have a template on here somewhere to where it'll tell me. I think you just showed it to us where it'll tell you which side it should go on.
Yep. That's what you're
Because
doing
what
now.
I guess what has me a little bit messed up is the fact that on the first part you have net income and net loss. So I'm automatically thinking that the right side of whatever's going on is negative because you have net loss on the right side. Does that make sense?
Yeah, but remember that we're looking at what's happening, and when you buy an asset, your cash goes down. When you sell an asset, your cash goes up.
Oh, okay.
All right,
Okay.
let's look at accounts payable. Where is that gonna go?
Um, accounts payable, that's the second, that's part 2, right? No.
It's a current liability
Is it?
most times.
Okay. Well, that will go over here.
You did what?
It increased. Sorry.
What happened when you borrow money from the bank? What happened to your cash account?
It goes up. Oh,
Okay, so you're on the wrong side.
okay. But wouldn't that be financing though? That's the third part, right?
It's current.
Oh, okay.
So some of those same things, we did before, but we're not looking at each check, each journal entry. Then what the
Okay.
long-term liability do?
That increased as well. Now is that on the third part because it's long term?
Yep.
Okay. Okay. I'm gonna go ahead right here where it say bonds payable because you already got that right there.
Okay.
That's $250,000.
And what did common stock do?
It increased as well. So same side over here.
Right, type 1. Remember that was a type 1 transaction, which is a source. So nope, go. I said type. I didn't say part 1. I said
Okay.
go back
So I was
down
on
to
the right side.
part 3. Go back where you were in part 3.
I'm in part 3. Right here, it's part 3, right?
Yeah. Okay, go ahead. So we got all the accounts done now. Let's see if we can balance out. Go to part 1.
Okay.
Add all your sources. What are the total sources in part 1?
$650,000.
Okay, put that down.
Then do the same thing on this side. Should be 75,000. So then you do the net change, right?
Correct.
Okay. We had part 2. Come right down. It's 575,000.
Okay. So what does that tell you about your company when you put that down?
That it's expanding, right?
Mm-hmm. Okay, yeah. Then put it over here.
And then over here, we have 300,000.
Mm-hmm.
Oh, I should have put dividends down here, but okay. And that's 200.
So what does that tell you about this company? The cash went up about 200,000, but why?
From financing, it went up $200,000 because, I mean, Because of the bonds.
Because you borrowed money and issued stock.
Yeah.
So for your operation, you had money, but you spent all of it. Then you borrowed some money or issued stock, which you have to pay back eventually. So this is what the statement of cash flow does. And this is, so it's calculated a different way. You have to think a different way. But you cannot analyze a company unless you do the statement of cash flow. You can't analyze a company unless you, so what was our net income on this company?
The net income was $350,000.
Okay. So
Okay, but
what?
I have a question. Okay, so on the statement of cash flow, there's 4 parts, right?
Yep.
Okay, so the first part is obviously shoot, where's the paper? Okay. The first part is operations, and the second part is investments. The third part is financing, and the fourth part is change in cash flow. Is that like, so the fourth part, the change in cash flow, is that just like you have this amount of cash and now you like it's literally just cash for the fourth part?
That's change in cash
Oh,
for
okay.
that period.
So the fourth part is only in just cash.
Well, you'd have cash equivalent. We're just using cash. But yeah, you can only pay your bills with cash. And that's what we're trying to find out.
So basically, about everything we just put on here, we didn't make or lose any money.
You said you made money.
Well,
You made it, but you spent it all. And so it would look like you had 200,000 more in cash if you just look at the balance sheet, right?
yeah.
But you know that, okay, they made money, but they spent it all in part 2. Then they borrowed some money so they have cash.
Oh, because these two, okay, because the part 4 has to match all the other 3 parts.
Mm-hmm.
Oh, shoot. Okay. Yeah, I'm gonna need some more practice on this because obviously I'm stuttering and shit.
So
I mean,
each
sorry.
team has been assigned a problem. So each team get a presenter to present starting next class period. Got a template. You got the first 4 things I told you to do. And so once you do the first 4 things, then you can scratch off cash, accumulate depreciation, and retain earnings. Then you just have the rest of the accounts to do. This is the statement that people didn't learn how to do. And we'll look at next time the issues that occurred and why those frauds occurred when people didn't learn how to do this. So yeah, it's different. But you can't be talking about you're gonna go around and invest in the stock market. You can't do this, okay? So finance majors, this is the statement that you got to understand.
So question, just for clarity, what's due next class? Because I don't even know what's due next class. So,
each team has a cash flow statement to do.
Okay, is that in course content?
It's an assignments.
Oh, okay, bet. Team cash flow and assignments due next class.
So each team will be doing a statement. You got the template. So you look at this and see. So we'll go through those statements next time and hopefully we'll start to become familiar with them. So you got a sense now, read it, begin to look up, work on your individual company and look at those cash flow statements that they have. So these statements are there, but people don't look at them. They just look at the income statement and the balance sheet. But there's a whole big difference when you look at the cash flow statements. And that's why when you look at your individual company, hopefully someone has GameStop and Best Buy and companies like that, you want to see what the cash is looking like. And so you'll be able to see why the hedge funds made the decision to say, well, we think GameStop's going out of business. We're going to sell a stock short. That is, we don't have the stock, but we're going to go on and put some sell orders in at 20 because they're going to drop to 5. Then we'll buy at 5 and sell at 20. That's what they plan to do. Okay.
Yeah. Hey, if y'all don't have y'all companies already picked up, can you let me know, please? Thank you.
I
Professor
have a
Blue.
question. Oh,
What about the people who didn't get to present last class?
Yeah, present next time.
Okay.
So just remind me of it. But that's fine, just number one, if you've turned it in, I got what you turn in anyway. So that's the key thing. Then we have the presentation part of it. So
Okay, does only the one person per group need to send it in, or should we all send it in?
only one person needs to send it in.
Okay, I was just making sure.
On everything, when it's team, I take off points if more than one person send it in.
Okay.
So we don't present with the project from you said he was going to do it on Tuesday.
I said we
Thursday.
got Thursday. We'll try to get it done Thursday.
All right.
We'll see how you all are coming because we've done those. We got the feel for that. Now you got to go and do okay. That happened. The reason it happened because people didn't look at the cash flow statements. Now you learn how to do a cash flow statement so that you would be able to look at the cash flow statement in addition to the income statement. So we'll start off with an example, probably try to show what Enron did and show how a cash flow statement would have picked up on what Enron was doing. Remember, Enron was doing what? Creating revenue. And a lot of those companies were creating revenue, making a journal entry 15 with no 3 entry inside. So we'll look at that first off next time in terms of what Enron was doing. Then we get those other presentations out. Then we'll begin to let people present their problem. Now you got to turn the problems in anyway. So we'll let you present them, and we'll see how we're coming and see how y'all doing. See if you all are ready for your exam on following Tuesday. Y'all be ready?
No.
So
Yeah, Professor Boyd, we should take a rain check on any exams because you have a lot going on right now. You do.
right. And I'm not really confident.
Okay, well, we always are flexible and adaptable. So
I did have a question for you though too. I had 2 questions.
okay.
My first question is, remember I was telling you that I'm gonna do my individual assignment on Berkshire Hathaway. So I've looked up the financial statements, but all I'm finding is from 2019. So do I do like 2019, 2018, or in 2017?
Right, because
Do that?
they're always behind on getting the statements out, but that's fine. Yes, so you won't
Okay,
have.
I'll do that. Okay. And then my second question was, I know you kind of made me and Kayla like in charge of like as far as like the group stuff and like people finding their group. So there's this one group. The student came to me because his group only has 3 people because one of his members had dropped the class, and he wants to him and then there's this other student in another group who wants to put her in his group, and she wants to go in his group because her group members aren't like contributing anything or being cooperative. So how do we go about that? Like, do we let them use her, like take her in their group, or because she wanted to do it?
How many people in that group?
In her group, I think it's like
The new group that she wants to go to.
3.
there's only 3, so
Let her go.
let her go with them. Okay.
As long as they don't get more than 4.
Okay, that's no problem.
Remember, you can change groups up until when you present what you're gonna make, which is in about a week or so. And that's why we're doing this, to see if the group can work out, because I guess you all are saying you're working hard now, but it'll pick up later.
This
Uh,
ain't picked up. What?
it'll pick up later. So, but I'm letting the groups test whether they can work together.
Hey, you funny. You funny. I feel like we already picked up.
Oh, you
Cause
feel
if
we
I,
already picked up?
you wanna know why I say that, Professor Boyd? Because everybody concerned about this cash flow, and not realizing there's a whole other team assignment you still have on here. The study problem, sir, that you just have neglected to mention that you
Well,
posted.
the problem is you have to understand financial statement journal entry so you can do this.
Professor Boyd, you know what? If I had a ruler, I'd pop you because this ain't right. It's not right.
Oh,
So
well,
cash flow due on Tuesday, and that's it. That's
so
it, and that's all.
say that again.
So team cash flow assignment due on Thursday, and that's it, right?
Yeah, their homework there. Yeah, so you got to break. You only got to do your homework on Thursday. You got one homework problem, which should not take more than an hour to do at the most.
An hour.
Yes, I said it shouldn't take that long. We just work one in 30 minutes.
Professor Boyd, I'm gonna pray for you.
So what? So you only got about 10 accounts to, remember we did them last time and you might have 20 or 30 journal entries? You now only have about 10 accounts to look at the most. And you can come up with that change and put it on that sheet and balance out. So I'm just saying an hour, but that's just communicating and working with your team. So let's see if we can get those done. I mean, and like I say, we're looking at it, but we'll look at what happens if you don't look at it. Okay, we'll start off with, okay, you talking about you're going to invest some money. We're going to put up a scenario of what Enron did, and we're going to look at what happens when you don't look at the cash flow statement. So if you ever plan on investing some money, or if you plan on working for a company and retiring from them, the only way you're going to be able to evaluate whether that should happen is by looking not only at the income statement, but the cash flow statement. And if you can't do that, then you're at the mercy of what people tell you. And that's what happened with Enron and all those companies. People didn't know how to do the cash flow statement. It was so hard, and they got a headache trying to learn how to do it. Then they lost all their money and lost jobs and everything. So you got to struggle with this to learn how to do it. Finance majors who are making decisions on buying and selling stocks, this is a key statement. And if they can't do that, then they can't really analyze the company and buy stock. So you want to buy and sell stock? Good. Got to learn how to do the statement to do it right. And you all are going to learn how to do the statement like you learn how to do adjusting entries and the other 3 financial statements, the other way y'all learn all of that. So I know you all going to learn this also. Right, Emerald? Right.
Right.
So you will learn, but you're being introduced to it. The crime would be if you weren't introduced to the statement to learn how to do it. That would be the crime. But, I see the same performance. Remember, y'all act like this sometime last semester, remember? And a bunch of y'all made A's. Right, Cameron?
That's right.
Okay. So the same thing's going to happen this semester also. We're in principles too. So sometimes it's a little more difficult. At times, it's new, it's different. But that's what your education is about, being better than when you got here. If all you learning is what you knew when you got here, you hadn't learned anything. So get up the opinion that I want to know more. And it's 12:30 now, and we'll be meeting till 12:30 until further notice so we can get all of this done. I'll see everybody on Tuesday from 11 to 12:30.
Hey, Professor Boyd, I need to talk to you.
Okay.
I need to talk to you real fast. I promise it won't take no more than about 2-3 minutes.
I start talking.
All right, so check it out. You mentioned NABA at the beginning of the class, and for whatever reason, maybe it's my me not being diligent, but I haven't been a part of the association, which is fine because when I genuinely just do not have time for anything extra right now.
They just meet virtually.
Well, I don't have time for that. I have to be at work like at 2:30. So will that hinder me in my because I am looking for an internship and obviously I'm looking,
There
to
are some companies where you have students who were never members when they're in college, and they're now hiring students, and they say, well, they're not a part of NAPA, I'm not going to try to hire. You don't have to be overly active in NAPA. Everybody's not active, but you got to be a member. Or some people don't say, well, they were, wasn't even a part of NAPA. I'm not going to help them. That's a true statement. So you need to join NAPA. Cameron, you need to join NAPA. Asada, you need to join NAPA. Rand,
Okay, I'm definitely
Okay.
gonna look into that because I need to do an internship like for real, and I need to like get involved.
you don't have to be all the way active, but you got to have that on your resume.
So what else it would be a good look on a resume?
I told you something volunteer work, like you supervise on your job, something like giving food to the needy. Then you tell me you work. What did you work at?
Well, right now I'm an assistant manager at HEB. I ain't never tell you that, but I'm telling you now. So, and
So
I'm getting trained for the bookkeeping department there too.
okay, but don't they do certain kind of volunteer things to help the community? HEB.
They used to do a lot more than they do right now because of coronavirus, but they do a few, yeah.
So you become part of one of those in some kind of way. So that goes on your resume. You cannot have a resume saying you're a 4.0 student. And they'll look at the work too now. But you're competing against everybody else. And so if they got things on their resume and you don't, then you're not competitive. So you got to do what you got to do. You don't have to be overly active, but get some other things on your resume.
Okay, so for joining that, but I need to email was it Perkins?
Yeah, Perkins, and they have I'll try to get the student to come to the class and visit, but email Perkins now.
Okay. Carl Perkins.
Yeah.
I talked to him like right before coronavirus shut the campus down. I just never followed up with it. So
we want to follow up on that.
okay.
And
I'll make sure I put that on the top of my to-do list.
Right. Yeah, you got to do that because, like I say, it's not you want more than the job that you're currently in. You don't want that job to keep you from getting a better job.
Yeah.
There's everybody in here. So that being the case, then you got to do these extra little things so that when your resume goes in, it sticks out that you got more than the grade.
Okay.
Anybody else with any questions or anything? So once again, this is something new and different, but by next class period, just like, remember making journal entries? Remember that, Dawkins?
Yes, I remember.
Now you're an expert at making journal entries? Y'all gonna be an
I
expert?
wouldn't say expert, but I'm better than I definitely was before. So yes, we're improving.
My class, my other class, first journal entry students had debit, common stock, credit, cash on their problems. A bunch of them. They debited common stock and credit to cash on the first journal entry. So you don't make that. Nobody here makes that mistake.
True. True.
So okay, if I didn't have that template and I just told you to do the statement, be one thing, but just like those journal entries, I frame that out. I've got a template. Once you become familiar with that template, it won't be an issue. So make me proud next class period.
We'll make you something next class period.
We'll
We'll
try.
work on it. I'm not proud, but you're gonna have some type of emotion going on.
You got a whole team working on it.
Yeah, we'll be all right.
So I'll be asking for the volunteers.
Don't volunteer us at first. Don't do it. Let me explain something to you, Professor Boy. I be needing a minute, and you just be throwing me into a little ring of fire, and I'll be very proud.
Cameron, you first.
Oh, thank you so much. I'll be
Maybe.
going
We'll
through
see.
some
We'll see how it
things.
looking.
Brandon, you second. Okay.
All right. Have a good day.
Y'all too. Bye.